Traders rely on technical charts to map the market's next move, but standard setups were overridden in minutes as headline flow took control of the tape, triggering a reversal that caught the market off guard. The shift began when President Trump announced he was officially postponing planned military strikes. The targets were Iranian power infrastructure. By delaying those strikes and citing productive talks to resolve hostilities, the immediate threat of escalation began to fade. Participation surged immediately. At the CME, the Chicago Mercantile Exchange, trading volume climbed from 219,481 contracts in the morning to over 533,775 by early afternoon. A single geopolitical headline drained fear from the system, forcing traders to rapidly unwind their defensive risk-off positions to chase the sudden momentum. When military tensions ease in the Middle East, the impact hits the energy markets first. Crude oil prices dropped sharply on the news. The WTI, West Texas Intermediate, a major benchmark for U.S. oil, fell roughly 10% during the session. Rapidly falling oil prices tend to ease broader market anxieties regarding inflation and the cost of economic growth. This drop in energy costs specifically benefited the technology sector. With the threat of an oil-driven inflation spike removed, capital rotated back into growth stocks. The rally in tech futures mirrored the collapse in energy prices, as the reduction in projected inflation allowed growth-sensitive assets to recover their earlier losses. This chart shows the tech futures market, specifically tracking NQM26. NQM26 is the active June NASDAQ 100 E-mini futures contract. Following the oil drop, price executed a sharp V-shaped intraday recovery. Data feeds recorded a price floor of 23,772.50, which appeared to catch the initial morning drop. Without verified session-sliced data separating the London and New York opens and closes, we cannot yet confirm if this level represents a durable floor for the day. Even with the bounce, the chart shows that the market has not yet reached or broken through its major historical resistance levels. On a higher time frame, the broader market trend observed over days or weeks, the current structure remains a downward staircase that overrides this single daily spike. Until price formally accepts and closes above these major resistance levels, the overarching technical trend remains pointed down. A headline-driven bounce provides immediate relief, but it is not the same as a verified structural trend reversal. Navigating a market shocked by news requires moving from emotional reaction to a disciplined, strategic response. To protect capital, disciplined traders avoid gambling on the first headline or trying to pick the absolute bottom of a volatile move. The CIY capital approach involves waiting for the news to settle and letting the chart define a verified floor. CIY Capital is a trading education group that focuses on defining risk parameters before entering a trade. Verified data and patient execution consistently outperform the urge to trade based on breaking news alerts alone. Managing through these volatile sessions is a challenge for every participant, from beginners to experienced professionals. Ron Rose's one-on-one coaching focuses on building personalized systems. Ron Rose is the lead mentor at CIY Capital, helping traders develop the discipline to handle sudden news drops without panic. You can find these systems at CIYcapital.com or by following the handle at Ron Rose Trading. Focus on your risk management, trade safe, and wait for the full session data to confirm the move before making your next trade.